Hi and welcome back. If you are just joining us, I am Dena Burton, the go-to realtor here in Los Angeles, California. In this episode of Dena Knows, I'm going to review the basic steps of figuring out what can I afford for a home. Once you've decided on buying a property, you need to figure out your price range and how much you can borrow. If you've got your eye on that 7-bedroom mansion with its own tennis court and a pool, perhaps you've jumped the gun just a little. Before you start getting your hopes up on that dream house, you need to figure out how much you can afford to spend on that house. This will also dictate how much you can borrow for your mortgage. An important first step is meeting with a mortgage broker. They'll crunch the numbers based on your income and expenses and give you a rough idea about how much you can borrow. When you first meet with a mortgage broker, they will ask for proof of your income, recent tax returns, have you filed for bankruptcy, things like that. Breakdown of cost. There are a few factors that come into play with a mortgage that could impact on how much you have to pay back each month. Initial deposit. This can be 3 to 5% of the home's value. Remember, the bigger the deposit, the better your rates will be. Mortgage length. Mortgages typically last 30 years, but other terms are available. Remember that with interest added, longer mortgages mean you will pay more overall. Interest rate. How good an interest rate you get depends largely on how big your deposit is, as well as how good your credit rating is. You can see how these 3 factors impact your monthly repayments using any mortgage calculator online. Easy, just Google mortgage calculator, it'll all pop up. Loan to value. Okay, now we're getting into the terms that you hear people throw around and it's like, what are you talking about? Simplest terms, and I'm gonna say it slowly. Loan to value is a financial term used by lenders to express the ratio of a loan to the value of the asset purchased. The term is commonly used by banks, and to represent the ratio, the first mortgage line is a percentage of the total appraised value of the real property. As an example, if someone borrows $130,000 to purchase a home with $150,000, the loan to value ratio is 130 to 150 or 87%. The remaining 13% is the lender's share, and that adds up to 100%. Okay, so those are the basics of figuring out what you can afford. There's a lot more to the home buying process, so please hit subscribe so that you are the first to know when we upload a new informational video. Also, if you like this video, please hit the thumbs up and write your questions in the comments below. I promise I will answer. You know what everybody says, right? Dena knows, right? Hashtag Dena knows, right?